How's it going, everybody? Welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going to go over our number one buy setup and our number one sell setup of the day. Now, I was browsing the Edge Finder a little bit earlier, and I noticed something similar happened between this episode and our last episode, and we have no bearish biases right now in the Edge Finder. No official bearish biases. We have two that are very close, Platinum and NZD USD, both with scores of -4. In order to be considered a bullish or bearish bias in the Edge Finder, you need at least a score of a 5, like you can see here, but we officially don't have any bearish biases in the Edge Finder. Lots of bullish biases right now, two very bullish biases even. Euro Yen is one that we are definitely going to take a look at with that very bullish bias score of +10. But because of that, I figured that we could take a look at something new, something different today to make up for that bearish bias. We are going to look at our top buy and top sell in the stock box today, our brand new market scanning stock software that shows you all of the most popular stocks from all around the world, as well as the most popular sectors from around the world as well. Now, the sectors aren't looking as bullish or bearish as the top stocks are at the moment. We see that we have a lot of neutral biases here, a lot of bearish looking sectors, and one positive green sector right here. It's real estate, likely because they are expecting more rate cuts to come. When rate cuts come, interest rates become lower, people can borrow more money. That is good for purchasing houses, but we're going to focus on individual stocks today, and we're going to take a really quick look at our most bullish, which is NOW, N-O-W, that's the ticker symbol, and our most bearish, which is actually KO, that is Coke. Well, technically Coke, I'm not sure what PEP is or REGN. We could take a look at those, but Coke down here at the bottom of the list. As much as it pains me, I am from Georgia. We work in Atlanta, the home of Coca-Cola, and it's one of my favorite drinks. Hate to see that the stock is so low at the moment, but that's okay. We're going to take a look at either way. So let's actually start with now NOW. We have a total score of a +11. That is a very bullish bias. We see that the sector falls under technology. The financial score is a +8. The trend score is a +2, and the 13F score is a +1. Now, very quickly, I can explain that the financial score is basically going off of earnings and all of the economic data that goes into all of these different companies. The trend score is simply how strong has the upward or downward or, neutral, just kind of bouncing back and forth trend been. And the 13F score is actually a hedge fund score. We can see the 13F portfolio tracker right here. And the 13F portfolio tracker tracks hundreds, and I mean hundreds, of hedge funds from around the world. They have to report quarterly what they are buying and selling. And we can actually track what all of them are buying and selling right here with our 13F portfolio tracker in the A1 stock box. Now, right now, I'm actually just looking at Berkshire Hathaway. This is Warren Buffett. That's probably a name you're familiar with. This is Warren Buffett's hedge fund company. So I can see here that in quarter one, he had 135 million, a little over 135 million shares of Apple. And in quarter two, that decreased down to 84.2 million shares of Apple. So I know that from quarter one this year to quarter two this year, he was actually selling Apple shares. However, that still does make up the majority of his portfolio. We can see this whole wheel here. And that Apple shares make up about 36% of his total portfolio. It's actually a really, really interesting thing to see. You can take a look at all of the hedge funds averaged together if I were to remove Berkshire Hathaway here, or you can take a look at any of them that you find interesting. So right now, based off of what other hedge funds are doing around the world, whether or not they are buying or selling NOW. It looks like most companies are buying NOW, and that is why we have a positive score here. And when it is available to us, when we can find it, the insider score lets you know whether or not CEOs or other big heads of companies, board of directors and whatnot, whether or not they are buying or selling shares of their own company. That is what the insider score is. So not every single stock ticker that we have here has an insider score, but when we do have that information available to us, we add it either -1 if they're selling shares of their own stock, or a +1 if they were to be buying shares of their own stock. But that's basically how the stock box scores all of these different tickers here, and we see a little bit different for top sectors. This is actually based off of more economic and fundamental data, how GDP numbers, manufacturing and service PMI numbers, retail sales numbers, CPI, employment change, unemployment rate, and interest rates, how these affect different sectors of the market. So it is a really, really valuable tool if you are into stock trading. And right now I want to mention that not only is the stock box 40% off, but so is the Edge Finder and our Discord services. Everything that we have on our website, a1trading.com, right now is 40% off for our Black Friday sale event. That means that you can get the Forex scanner, the Edge Finder, that actually includes more than just Forex. We have industries and commodities, indices, metals, commodities, crypto, bonds, and Forex. We have so many different assets here getting tracked in the Edge Finder that's getting updated daily as all of these things are changing and updating in the market and new information is coming out. All of these things are getting scored based on all of these different metrics here, and the stock box as well. Both of these things, as well as our Discord services, are 40% off right now on our website. You can use promo code A1YT at checkout to get 40% off the Edge Finder, the stock box, or any of our Discord services. But I said that we would check out our most bullish and our most bearish asset here in the stock box. So let's just go ahead and check out TradingView really quickly to see how these things are actually trending. I mean, we have a very bullish bias on NOW. So let's see if the stock box is living up to the hype. And we can see that this thing clearly deserves that +2 trend reading score because of this sharp upward trend that has been in ever since really the end of May, beginning of June. This thing has continued to push higher and higher and higher, and even recently gapped higher. We can see the earnings here. We see green earnings numbers here showing up, and that is in line with our financial scores, +8 financial scores. We had good earnings on this company. And the 13F scanner, of course, tracking all of those hedge funds around the world. They seem to be buying into NOW. So all of the things are lining up for that very bullish bias on that stock. ServiceNow Incorporated. Not sure what that means or what that does, but NOW is looking very bullish according to the stock box. Now let's check on Coke. Coca-Cola, something very near and dear to my heart. I love Coca-Cola. One of my favorite drinks. KO is the stock ticker on that. And KO has been tanking since the beginning of September. We saw a sharp move to the downside, a little bit of consolidation, but ever since then, this thing has been moving lower and lower. We see it lower on the day today, Thursday, November 7th. By the way, interest rates are coming out today, the FOMC meeting here in the United States. It is very, very, very likely that the Federal Reserve is going to cut interest rates for the second month in a row. So that is something to definitely keep your eye out for. That is going to have big impacts on our top sectors as well as our Edge Finder here. Again, 40% off, link in the description below, promo code A1YT. But if we check out, let's go back to top stocks. If we check out Coke, it says that the financial score is -7 and the trend score is -2. So we definitely see why the trend score is a -2. I mean, that is a sharp downtrend for our -2 trend reading score. But there is one positive to look at here, and that is that hedge funds seem to be buying into Coke. They must believe that this thing does have more potential to the upside, that this is just a large pullback, so perhaps they're getting it at a cheaper price than they normally would, and they expect it to bounce back up. And that is a silver lining with the 13F score here, but overall Coke does look pretty bearish to the downside. So that was our top buy and top sell according to the stock box, but I'm not going to leave you with just that. We're going to check out one more thing really quick, or we're actually going to check out a few more things really quickly. We are going to get into Euro JPY, but before we do that, of course, we're going to check out first the COT data and retail sentiment. Let's get an update on what institutional traders are buying and selling. So right now, the commitment of traders data report says that they are selling the Canadian dollar. 87.67% of open trades on the Canadian dollar right now are short positions when it comes to institutional trading. We see something very similar for the Swiss franc. 85.28% of open positions on the Swiss franc are short pairs, and bonds right now, bonds are heavily shorted from COT traders. We can see the dollar sitting pretty close to 50-50, slight edge over 50% at 52.01%, but really it's too close for 50-50 for this to have a strong bias one way or the other. Our top three most long pairs when it comes to COT data are silver, gold, and ZAR, the South African rand. We see silver sitting at 80.56%, gold sitting at 80.65%, and the South African rand sitting at 92.9%. But let's look at our biggest changes week to week. So the latest weekly COT filing is showing you how all of this information and data has changed last report to our most recent report. So right now, the S&P 500 was our biggest positive change of the week. We see a positive net change percentage of 3.31%. What that means is, based on the total number of long contracts and the total number of short contracts, we can see that overall there was a positive increase of 7,660 long contracts. That's how many added long contracts there were to this total number here. But on the short side of things, we saw a decrease or a closing of 35,541 short contracts. So a slight increase of just over 7,000 contracts here, and a huge decrease or closure of short contracts on the S&P 500. Now, overall, it is still pretty close to 50-50. You know, if you're familiar with the Edge Finder, that the magic number for getting scores on the Edge Finder is above 60%, so that we can see that it is clearly and obviously favored in one direction or the other. That is not the case yet, but a big change with over 35,000 short contracts getting closed and pushing this thing closer to the long side here, almost up above 60%, but not quite yet. On the other side of things, we see the Japanese yen right now with a total number of 64,925 long contracts open, 89,742 short contracts open. That is a total of almost 42% long, 58% short. So even closer to crossing that 60% threshold than the S&P 500, but still technically about 50-50. However, we see a closure of 14,439 long contracts week to week and a opening of 23,149 short contracts for an overall net change percentage of 12.4%. And you might be wondering, how come this number is so much smaller when they had so many more short contracts closed? Well, it's because it's going off of the total number of contracts. You can see that there are so many more open contracts on the S&P 500 than there are on the Japanese yen. So when there are changes like this, like a big $14,000 or 14,000 contract shift and a big 23,000 contract shift here, this percentage is going to have a much greater impact because there are not as many contracts open rather than the hundreds of thousands of contracts open on the S&P 500. So there we go. I'll let you pause the video if you want to get a closer look at this COT latest weekly COT filing, but I'm going to move into retail sentiment. We're going to check out our major currency pairs first. So our US dollar pairs, what are day traders buying and selling at the moment? So right now, everyday day traders are really long things like USD CHF and NZD USD. We can see both of those things up above 60% here, 64% long on USD CHF and 72% long on NZD USD. That is a contrarian signal for us. Typically, what we like to do is do the opposite of what the overall crowd is doing. If everybody thinks that it's going one way, if the majority of people thinks it's going one way, the market is oftentimes going to do the opposite. So that is going to be a bearish indicator for us. On the flip side of things, though, we see that 73% of day traders are shorting USD CAD, and that is going to be a bullish indicator for us. Let's check out our minor currency pairs next. So we see Euro Pound, Euro Aussie, and Pound Aussie up above 60% here from day traders. Again, those are going to be bearish indicators for us. And we have a long list of currency pairs here, all favored over 60% here, and those are all going to be bullish indicators for us. We'll finish up with metals, indices, crypto, and commodities. And we see that day traders love buying into these things. We have crypto, commodities, indices right here, all favored over 60%. And those, again, are going to be bearish indicators for us. Now, of course, that doesn't mean that it's going to be, bearish every single time. It's just more often than not, when everybody is leaning one way, the market tends to do the opposite. I want to mention one more time really quickly before we break down Euro Pound that right now the Edge Finder, the stock box, and our Discord services are 40% off. It is the biggest discount that we do every single year. 40% off the Edge Finder or the stock box. You can get it right now on our website, a1trading.com, for 40% off with promo code A1YT. Now let's finish up here with Euro Pound. Like I've mentioned before, it has a very bullish bias, score of +10. COT Data is a 0 or a neutral score, and retail sentiment is a score of +1. Taking a look at that COT data, we see that the euro and the pound are both around that 50-50 mark. Neither of them have crossed over that 60% threshold that we use to score it one way or the other. On top of that, both of them have had negative weekly changes. So these two things are looking very similar in the eyes of COT data. Neither one of them is really favored over the other, so that is why we have a 0 or a neutral score here. But retail sentiment is giving it a score of +1 because just barely over 60% of retail traders right now are shorting Euro JPY, and that is gonna give us a +1 score. Seasonality is a score of +1. We can see that historically speaking, over the last 10 years, averaged together, the month of November is historically a bullish month for the Euro Pound, the Euro Yen. Our trend reading is a score of +1, but we also see that recently it's dropped a score from a +2 down to a +1. So that right off the bat tells me that this likely has been trending lower for a couple days now, whereas before it was trending much, much higher. But let's see if I'm right about that. We're going to check price forecast, and we're going to find Euro Yen. In fact, I can search it up, EUR JPY. And there we go. So that is kind of what we see here. We saw a really, really sharp upward trend through the end of October, all the way up into Halloween, October 31st. And from then on, we saw a drop and a bit of a consolidation where it hasn't moved around too much in the month of November. But price forecast does predict that it will steadily move higher throughout the month of November. Seasonality tells us that as well. But overall, the trend has not been quite as sharp as it was in the month of October. Let's finish up with our fundamental data here. We see GDP, retail sales, inflation, and employment change all have strong +2 scores here. Both of our PMI scores are 0 or neutral, interest rates neutral as well, and unemployment rate is our sole -1 score here. Now, in case you are unfamiliar with the Edge Finder, what we are looking at here is GDP-A and GDP-B. GDP-A will be our first currency pair listed, so that is going to be the euro, and GDP-B will be the second currency pair listed, that will be the Japanese yen. And simply what we are looking at is whether or not it beat, missed, or met the forecasted expectations for any of these different metrics here. GDP numbers, manufacturing PMI numbers, services PMI numbers, retail sales numbers. Did it meet, miss, or beat those forecasted expectations? If you want a more in-depth breakdown of all of that fundamental data, of course we have it for you. It's all here in the Edge Finder. We have tabs and tabs and tabs of in-depth fundamental data for all of these different currencies and countries that show you, historic, what it was months ago, years ago, all those different kinds of things. But in these scanners pages, in order to keep it quick and simple, we just want to know whether or not it missed, beat, or met the forecasted expectations. So here I can see that the euro beat its GDP forecasted expectations, whereas in Japan, they were missed. Both manufacturing and services PMI numbers for Europe and Japan were beat on all fronts here. But in the retail sales, again, we see that Europe beat its retail sales expectations, and in Japan, they were missed. Inflation data, we see the CPI forecast was 1.9% in Europe. It came out at 2%. And in Japan, we see it forecasted at 2.7%. It came out at 2.5%. The employment change in Europe was forecasted at 0.2%. It came out at 0.1%. And the forecasted change in Japan was neutral, or 0%, and it came out a little bit lower at negative 0.1%. The unemployment rate in Europe forecasted to come out at 6.3%, and it did. It met those expectations. And in Japan, it was forecasted to come out at 2.5%, but it actually ticked lower down to 2.4%. So there we go. There is all of the data and numbers and information backing up that very bullish bias score of +10 for Euro JPY. I'll mention this just one more time, that Black Friday is going on right now. So if you want the Edge Finder or the stock box, if you liked what you saw in this video, you can get it 40% off right now on our website, a1trading.com, and you can use promo code A1YT for a discount at checkout. Now, if you have questions about either of these products or our Discord services, we have live operators on there right now, live team members waiting to talk to you and take all of your questions. You can actually go on our website, or again, down in the link in the description of this video, and talk to a live member of our team right now about any of these products or the sale, and they will answer any questions that you may have. But again, if you're ready to get the stock box, or if you're ready to start trading with the Edge Finder, you can get it 40% off right now with promo code A1YT. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.